Hi, Warriors. TGIF. I like you guys bantering about it. Hello, Laura. Sinatra. Jordan, how are you? Paul. Michael Weissman. Brand. So, guys, team, this is what Ingmar writes. I'm just reading von Hayek and writing about his theories. I have to admit that I learned many basics to understand in this very webinar. Well, Ingmar, if you still tweet, that would be a good one. So dollar strength. This may be, an opportunity to fade it. Hi, team.
Hey, good morning, Dale.
Morning, Dale.
Hey, guys. So
we're smack dab in the middle of the triangle now in the dollar index.
Yeah, and I was thinking that this still could just be an ABC and we fail from here, because I was thinking 108.50 right in here for a buy. This looks incomplete to me. We have one, we have two, so maybe there's one more good run from here. You should probably buy cable, which is demonstrating the most relative strength. And now Aussie, if I only had the patience, this was my original target down here. So I don't know. I wouldn't chase the dollar here today. And in fact, I think yen has reached upside objectives. There's, really nothing there technically to short it. But I did at 43 with a 100 pip stop. And the reason is not the end. The reason is that it hasn't been able to drag up the 10-year. And look at how we're just holding here, hanging on by a thread. So I'm saying the bond market's right, and that the yen could peak, and that we could get, if we do get a nice peak here in the yen, it could be a decent break, maybe back down to 140. Maybe even the breakout 138. If you're, in the camp that the dollar's going to make a new low, between here and 280, might be a good short. Or I could be all wet and the dollar is good, Blake. Is that what you're thinking here?
No, well, here's the problem. And this is where you're going to have to listen to what Ryan and Stelios and K-Man say about this, because I don't know if you saw the overnight data out of Europe. Europe PMIs absolutely crap the bed across the board,
and they're tightening into
and guess what we have today?
Oh, we have the same.
We have PMIs. So I don't know if I'd be like ballsy enough,
which is worse,
to start, buying dollars at this point. I mean, if you're getting squeezed, you're getting squeezed. If you're short dollars, and you're probably thinking twice about that, but at the same time, we do have PMIs coming out at 9:45 this morning Eastern. So that, I don't know if I'd.
What is that? Prostate management issues, the PMI?
Yeah, that's exactly what that's what Ryan says it is, right, Ryan?
Well, right, yeah, Ryan drinks a lot of beer, so he's gonna have some
over here.
Huh? It's a good thing you're lucky.
It's the pub movement initiative,
which you are CEO and chairman so anyway, look at S&Ps. They tried to rally yesterday, held this line. Don't tell me this line doesn't mean anything. So another 10-15 handles, we're back inside. And the banks got hammered again yesterday. Telling you, we're going to see new lows in the regionals. Expect some news about failures or consolidations in these regional banks. And even, Goldman, which is not, you don't go have a checking account at Goldman, but it does not look too good, does it? Look at this. Getting ready to break down from this consolidation. impulsive, corrective, another wave on the way.
Must be
So-
all those crappy forecasts they keep doshing out.
Well, my quote of the week is coach says, don't bank on the banks. All right. So what do you think, Ryan? Am I crazy to be probing for a high in US dollar yen here?
No, I don't think you're crazy. I think, as I said yesterday, I think a lot of this is yen more than the dollar. Like you said, this is going up even while US yields are going down.
Yeah.
That's not a picture you see often.
Yeah.
But that's your big fat clue what's moving what at the moment. For the rest of it, this is data dependency trading. You look at euro dollar, what's happened this morning. You look at what happened with euro yen this morning, euro sterling this morning. Bad data numbers, not so bad out the UK, decent enough retail sales without being, stellar. And you're getting your moves, euro yen, that got hammered over the European PMIs. And, now look at it. Now we might be heading back towards the highs again. So, we're going to be trading between the numbers, and you're going to get this with the S&P services, PMIs from the US, stellar PMIs in the US. You see dollar yen higher, you probably see euro dollar making another new low, and that'll be your Dixie going up again. But if it's bad numbers, euro dollar could be back at 109 pretty easily.
Yeah. I'm viewing this as that there might be one more charge. So we'll see. It's not going to be good for risk if this fails. But I talked to someone that thinks that the market could fail. Let me see if you guys have said that we could have risk off and everyone expecting a bid to come into the dollar, and it won't. Anyone expecting the unexpected? That if we had a correction in the S&Ps, that we wouldn't get a dollar rally in, following the old paradigm?
It depends what the driver is. I mean, I think the S&P is going to be something to watch closely over the PMI later. If it's good data and the S&P goes up, that tells you the S&P stocks are trading economic data. Conversely, if it goes down on a poor number, that tells you another story. And then, like you say, what does the dollar do? Does the dollar go down on worse data with stocks, or does it go up? This is something we've been looking at since the beginning of the year. What does stocks do on economics now, on the fundamentals now?
Yeah. Stel, we had looked like we were having a breakdown, and we're trying to negate it already. So, I bought some silver yesterday because it got pretty close to the 22 number. The RSI looks lousy, to be honest with you. I think the reason I think, but if we start getting back above this trend line, and I may have had it drawn wrong, maybe it should be, against this low. Kept trying to hold. We had the breakdown, and now we start trading back over 1920 or so to look like, we had some capitulation and gold's going to rally. So gold looks better than silver. Technically, didn't give up as much. And all you have to do is look at this to see what's been holding up better, right? And something, the XAU, the gold silver ratio and the dollar have pretty good correlation. So right now it's saying that that the dollar looks okay. So those are my thoughts going into the end of the week. I think we could have a false breakdown here, and it would be aided, if I'm right, about this being a high setting up in the yen, and we get a yen sell off. We get yields continuing to fall. Should help most commodities out, and you would think it would hurt the dollar. So so I have more conviction about the connection of the yen with my bias in yields than any other currency. here. But I still can't get real bearish. This could just be a correction before we get one more run. So, who wants to take over today and not ask me any questions?
Dale, why do you want me to take over? Dale,
Huh?
He was going to
what is your birthday? Dale, what day is today? Dale?
Today,
Are we there yet?
Welcome to the F.A.C.E experience. And that's what I just, not what I said yesterday. I'm just fading out.
You sound like
a
you're fading out
cameo
and you want to check out and you want to be done. It's Friday. I get it. So I'll ask the questions now. So
it's a
Dale,
cameo appearance.
what's your mom's maiden name? Dale, what street did you grow up in? Dale, what elementary school did you go to? I'm asking you all your security passwords.
Your first pet, etc.
Pierre.
No, jokes aside, I know we have very little amount of time. Let's go around the horn and hear what these guys have to say about the Eurozone PMIs, because that was an absolute, I mean, you could see the red across the board. Here, we can just do it like that.
There was some news.
Actually, there's a couple.
Oh, go ahead.
No, I was going to say there's a couple beats there. Okay.
All right. Anyway, there was news that people are worried about a terrorist attack on that nuclear reactor in Ukraine.
Oh my God, my tinfoil hat. Where did it go? It was right around here somewhere.
It won't reflect it. I tried it. It doesn't reflect radiation.
Just messes your hair up.
All right. So Ryan,
how do you know, bro?
Ryan, how do you feel about all of this data that came out overnight?
Yeah, I've got good memory, Dale. Yeah, the data was. Yeah, the data. The striking thing with the data was that the services were dropping back. That's been a bit of a mainstay for the fundamentals, that services were, doing a lot of the lifting. It's still in expansion, but it's pulling back a bit. As for manufacturing, well, that's still well in the doldrums and going lower. And no surprise that it's going to weigh on commodities and stuff like that. So obviously that's a big feature, particularly of manufacturing, to keep an eye on commodities. Is this part of what we've been talking about for months, that economies, they're not going to fall into a fiery pit, but are they going to be going gangbusters either? I think that's where we're heading, and the data's showing that. A little bit of weakness. Probably a couple of months we get a little bit of strength and then a little bit of weakness, and that's what life is going to be like for the foreseeable future.
Yeah, we were just pointing this out in the ForexAnalytix chat room. The pound Kiwi, the pullbacks have been very, very shallow to the 38% retracement, and we pointed out that before it was going to break out, actually earlier, that we would target 208.50. Here, just here's the chart that was just I just posted that just a second ago while Dale was talking, but here's the chart from a little bit earlier, as we were approaching the breakout point. But when you see things like this, you have to start to question, this consolidation that we've seen in the stock market this week. If it's if it's a start of something a little bit bigger, when you start to see commodity currencies really underperform like they are right at this moment in time, right at this second in time. But anyway, I'm sorry, I got off on a little bit of a tangent. I wanted to hear what K-Man had to say about the PMIs that came out overnight. It sank the euro. I mean, the euro slipped back below 109. So K-Man, are you here? And if you are, what are your thoughts about the PMIs?
Yeah, I mean, this is finally we can trade some of those data again after only talking about central banks and inflation. So
yeah, true.
That weighed on the euro for sure, euro process, but they are slowly creeping back up. We have to note that. I've got a bit of a level here, just 108.90 figure euro dollar. So that's going to be the one to watch, I reckon, into the US PMIs, and then we see whether we get divergence or not. But yeah, we're seeing those slower PMIs now, and that comes after a bit sluggish German data already out earlier, I mean, the past few weeks or months, and could be significant enough for some of the euro process. But then again, yeah, they are putting in a bit of a comeback. Euro yen got an absolutely big slap this morning, but and I've been saying and repeating that in the room for a long time. 155 is a magic level, and it will depend whether we close above or below. Goes back to 1990.
Yep, it sure does.
It's bang at 155. It's also target of the channel, the latest channel. It's the 1618 of the latest retracement extension. It's all happening at 155 figure 20. So that's going to be your magic level on the euro yen. And then, yeah, for the rest, it's going to depend on US PMI. If they go in line with the Europeans, then it's ball back in the center and we start all over again. And probably the dollar takes a little bit of a slap back of what it gained. I'm watching two levels on the dollar yen. It's the break level 142.45.50 and the top side 143.60.
Okay, and K-Man, let's talk about this. And when Dale mentioned about the dollar, the first thing that came to my mind was, well, shoot, we got our own PMIs today. We got PMIs coming out a little bit later this morning. Like I said, at 9:45, which it says 6:45 on my computer since I'm on West Coast time, the left coast, the wrong coast, I forget whatever anybody else calls it, but anyway,
you're not on the coast.
I ain't even on the coast. I'm just in the dirt. I'm in the damn dirt.
You zonies invade our state every year.
Believe me, you can have your state.
Take
it. It's all yours. And a matter of fact, you should all go back because everybody from California has moved into where I'm at. Anyway,
you're in trouble now.
Anyway, joking if you live in California, but it's true.
No, you're not.
Please leave. All right, just kidding. You're taking all of our water. All right. Anyway. No, but K-Man going and Ryan and Stelios really, who I was talking to here, with the PMIs coming out, you got do you really want to stand in front of the dollar? And especially if you take a look at yields, and this is where it gets a little tricky, because if you look at like the 10-year, all right, and you can see what the 10-year is like, just approaching some pretty key support in a big triangle, right? So if we break below here, you can see how that would just open up the downside in yields. And bonds, as Dale's been pointing out, bonds look vulnerable to a correction from here, right? Here's the 10-year. So you can look at the 10-year, you can zoom all the way out, and you could argue that the 10-year looks like, hell, we might bounce. But it's not just the 10-year. You got the shorter end of the yield or the curve, excuse me. Here's the 5-year. Here's the 5-year, yeah. Right? Yeah. Right on support, right? Right on support. Yeah. Here's the 2-year, right on wedge support. Then, and I'm going to defer back to K-Man here in 1 second. Then you got the Nikkei that is actually broken.
Finally.
An ascending channel. Yeah, overnight. So it broke down overnight. And we were talking about this last night in Asia in the ForexAnalytix chat room. Now, if that all happens, well, you can see that all happening. One of the strongest correlations to yields and the Nikkei is going to be the dollar yen. So you have the dollar yen that's just kind of perched up here and it's been holding up, but the yen's been beaten down pretty good, and daily sentiment index came in below 10 overnight, which is extreme. So, if you're watching these PMIs coming out today, I don't know if I'd want to stand in front of the dollar, in euro or otherwise. And maybe that's one of the reasons why the euro has recovered, because everybody's like, hell, I don't want to be long dollars ahead of, later today. So what are you guys' thoughts? K-Man, you were just speaking. So what are your thoughts with that?
Well, that's going to be pretty binary this afternoon. If the US follows the European CPIs, then the dollar is probably going to lose what it's made. This morning, and that's going to be relatively simple. It depends by how much it misses this afternoon. But if the PMIs are lower, I'd rather be long gold than long silver because of the industrial nature of the silver. So if the PMIs are much,
that's so priced in, isn't it? Though,
is it priced in?
Yeah, I think it is.
Then I shut up.
Yeah.
You know
Anyway,
what
no,
else
no,
is
it's
priced in, Stel?
what's
I
else?
was looking at this, and the silver miners
Didn't mean to
are
interrupt, by the way, Kay. I was just having a laugh.
You talk about silver, Stelios is going to interrupt, and every time it's a given. So you can't. You have to know that.
And I interrupted Dale as well. Sorry, I'm going to shut up.
That's okay. That the silver miners are back at the March levels. They're already discounting $20 silver.
What is
Because
the
that's where
silver
silver
miners
was in.
ETF? I'm sorry, just refresh my memory.
SILJ, SIL or SILJ is the
I'll take the
juniors.
junior miners. Okay.
They're back at the March lows. Look at that. And so the March lows in silver was 20. Okay, so we're $2 above it. So the shares are already pricing it in. I think we're going to start entering a stage where even if silver after a bounce starts going lower, that the shares are going to start acting better.
You're just like all of you guys are just like the damn market. Like we were just talking about PMIs, and now I'm talking about silver, and I still really want to talk about PMIs, but it's like everybody has ADHD around here.
Do you want to hear?
What was the non-farm payroll last week? I totally forgot. I'm not even trading it anymore.
Do you want to hear?
No, we don't.
Controversial view.
PMIs. Tell us about
controversial
PMIs.
view on PMIs and everything.
Yes, please.
I think yields have topped. That's it. I think we're done.
Full stop.
Sorry.
I don't.
Full stop.
Yeah. I think we've topped. And the reason is we are starting to see the effects of higher rates. We've always said rates going higher so quickly, you're not going to see the effects in the next 2 or 3 or 4 months. But now, 12 months later, we are seeing economic activity slow down. And PMIs are a great example of that. And I think we're going to continue to see economic activity slow. We're going to continue to see inflation slow. Maybe in countries like the UK, where they've really screwed things up, it's going to take longer. And countries which are dependent externally on energy, is going to take longer. But I think we're going to continue to see inflation creeping lower. I don't think it's going to go back to target or stay there. I think we're going to have to get used to slightly higher inflation rates. But I think the central banks are now getting it, that these high rates, or even potentially even higher rates, are going to absolutely kill the economy. And we're starting to see it. So I think yields have topped.
Let's talk about that for a second, and I'd love to hear you guys' thoughts about this, because you said inflation's not going to quite get back down to target, and I'm hearing a lot of macro economists are starting to say the same thing, which that poses an issue for the Fed, because you can tell, you listen to Powell, you listen to his testimony, the last 2 days of testimony, what you didn't fall asleep through, and you managed to hear. He sounds like a man that's just gonna keep rates high until inflation meets the Fed's target. I mean, they still have a lot of work to do. So how, if you're right, which I think you're probably, I would assume inflation's not going to come right down, and then we start seeing rainbows and unicorns again. If that doesn't come down and inflation doesn't come down, that means the Fed's probably going to keep rates higher for longer, right?
Oh, higher for longer, maybe, but I don't think they're going to be doing more, because remember, last print was 4% on the headline, and I think next couple of prints are going to keep going lower, so we get to 3%. That, for me, for the Fed, is enough to say, okay, we're going to stop here and see how things go. That's what I think is going to happen. And also yields, remember, these markets, they're used to having pretty much zero yields across the curve. Anybody I talk with, and I speak with some people who are, quite financially liberated, let's say, and they have lots of money on the side to do stuff. They're all saying these yields, 3%, 4%, 5%, that's it. I'm done. I'm buying bonds.
Yeah,
this is what I want.
Why wouldn't
yields.
You? Yeah. Why wouldn't you?
Of course. And we remember 15 years now, we've had, 10 years at almost nothing. So, seeing 3%, 4%, 5% plus, I mean, that's, okay, maybe the 10 years, not at 5%, but 2 years, right? This is great yields that people are going to be wanting to rush in to buy bonds, I mean. So I think there's going to be a structural bid in bonds going forward. And that's why I think yields are very difficult to go higher from here. I think 10-year around 385, 390, that big level, for that to break, there either has to be some kind of huge, I don't know what kind of a bond crisis it can be, what kind of event has to happen, or inflation in the US has to start rising, going back to 4 or 5%. That's going to be game over, I think. But I don't think that's my base case scenario. It's not.
280 and then 450.
280, I think, yeah. I think 280 is happening.
But then 450.
I don't know. I can't see that.
I'll write it down.
Yeah, okay.
All right. Well, hey, Stelios,
I
appreciate your view, and I think people are listening in because yields are actually breaking lows right now as we speak. So they must have heard,
are on the same side of this.
They must have heard Stelios talking. Ryan, you've been pretty quiet through all this. So what are your thoughts about yields, the dollar, PMIs today? What are your ideas here? And by the way, is Steve here? I haven't even looked. Steve is here too. I'd love to hear Steve's opinions.
He's here.
Ryan, all right, Steve, hold on 1 second. Since we don't have you don't have a guest today, do you?
No,
Coach? No. Oh, great. We'll keep Dale here longer against his will. So Ryan, what are your thoughts here?
Stel's actually agreed with what I've been saying for quite a while now.
Finally, it's finally he's on board.
Finally, yeah. Right. I've said for a long while, I struggle to see how yields get up to 4% unless there's some sort of event. Because the market's now pricing everything, and if the market is going to go down if the economy falters, and that's natural. Central banks are getting to their peak rates, so on that side of things, yields aren't going to rally. But can we get up to 4%? I think we're probably moving a bit of a range while we sort out the next big trade, which is going to be the cuts, if and when. But that's well in the future. But from here, I see a bit of ranging. We could easily break 3.7%. And I know we've got a level down at 3.6, but this 3.7 area is an important level as well. We've been holding above it pretty much for most of June and beyond. So we could break over the data, but I think we're in for a bit of range until the market knows exactly how high is high and how long is longer. And that's what we're going to be playing with between the data. Bad data, this stuff, we probably go down to 3.6. Good data, we go to 3.8. That's the market we're in at the moment.
All right. Well, thank you for your opinions on that. I appreciate it. And it does, again, I'm going to just argue. Well, I'm not going to argue. I'm going to sit here and point out these charts. You got the 10-year. Really looks like we are range bound and maybe even tightening. In a consolidation like you can see here. I wanted to point out relative strength, and this is a daily chart on yields are starting to break down as we're at the upper end of our triangle, so that should expose a move back below the 200-day moving average. So Steve, where do you stand on yields and Earth and where the human society is at today?
First of all, Earth is flat, right?
The Earth is flat, correct. You got it. Bingo.
I hope we all agree on that.
Let's go for a boat ride.
I'm joking, obviously. Listen, today it happens that I'm speaking last, so the problem is that I don't have much to add. I mean, I agree most of the times with Stelios and most of the times with Ryan. And my view on yields
and never with Blake.
Never with Blake, yes. And my view on yields is practically the same. Meaning, is it a certainty that yields have topped? No, but I think it's a very high probability scenario. I think the next big move in yields is lower, even if temporarily it happens that they end up moving higher, which isn't out of the question, right? So if we are looking at where the next big move is going to be, in my opinion, it's going to be to the downside. As Stelios said, we've already started seeing the vast majority of data, even lately, employment data getting a little bit worse, but other type of data have been worse for quite some time.
And you make a great point, Steve. I think data is starting to weaken,
yes,
not just here in the US, but globally. So it's that's going to be one of the things that weigh on global yields, right?
Yes. So that's what I think about it.
Okay. All right. Now where does that put the dollar in relationship to other currencies when US yields are dropping, but yields across the globe are dropping? What do you think, K-Man? Where does that put the US?
That's a very tricky question, Blake, but in my opinion, we haven't seen the dollar find a low. I personally believe there is lower levels coming for the dollar.
It doesn't. I mean, it doesn't
not
look
imminently.
Like that doesn't look bullish to me.
Yep.
Yeah,
exactly.
It looks like bearish consolidation.
Exactly.
K-Man, what are your thoughts here on global yields if we start to see, yields across the globe just poop the bed? Where's that put the dollar?
Lower.
98.
But I mean, well, let's say data continues to weaken across the spectrum.
Across the globe?
Yeah.
No, then you're going to have to choose your dollar wisely. Okay. Because if it's slowing down in Europe at the same time, what do you do with euro dollar?
Right.
And then per deduction, what do you do with your Dixie? Because it's 56% euros. I mean, if globally the data weaken, then it's time probably to buy yen for a change. Be very careful with what you do with the antipodians. The Aussie will likely weaken, and then probably the emerging market currencies will start to weaken as well, because emerging market currencies, they need good global growth to do well. And actually we are seeing it already today in the rand, because with the weaker data, dollar rand is up quite a bit, and rand is weakening across the board.
Yeah, if you weren't in if you're not in the ForexAnalytix community, I'm actually K-Man played this right off of trendline support. I bought it yesterday into this inverted head and shoulder pattern, and the Aussie obviously has a head and shoulder pattern. It's got about another 100 pips to go before we reach target. And that broke down yesterday, but we've been talking about it once it broke the 38% retracement yesterday. So as K-Man's pointing out, emerging markets, commodity currencies, the Antipodeans, and I can never even say that. And actually the Kiwi's starting to come under pressure too. Great heads up, K-Man, in that. Dale, I'm going to keep you here for another 30 minutes because it's Friday.
At least.
Just kidding.
At least.
Hey, let's.
Somebody's singing.
Yeah, just real quick. Oh God, look at the Aussies really crapping right now. And notice.
Look at Norway, 2.5% dollar Norway.
I know, and they raised
50. This pair is just the absolute widow maker. Seriously,
it is. This thing is going to literally test.
Yeah,
I never thought it'd get anywhere close to this, but the way things are going, we see the S&P correct like 7-8%. Dollar Norway is going to test these levels, right?
It was unthinkable, I think, but hey, we're going there.
That was like a generational high. I thought. I thought like there's no way I'll ever see that level again.
Do you know what? This is a pattern that markets have been doing over the past 5 or 10 years. We are seeing all these cycles get really smashed up and squashed up, and we're seeing things that used to take 10, 15 years to happen. They happen within a couple of years now. It's crazy.
It is. Hey, and speaking of which, I want to say, let's talk about Norway for a second. Norges Central Bank raised rates, 50. I think the market's expecting another 50. Is that correct? Like you Europeans may know a little bit better than me, but you have this whole crude oil issue, and Norway, that is their export of choice. And on top of that, the Norges Central Bank has a very big exposure to, and I know it probably has nothing to do with their monetary policy, but they have a big exposure to U.S. equities at these levels, or global equities at these lofty levels. I mean, what happens?
It's the biggest sovereign wealth fund in the world, isn't it?
Something like that. But what happens if I know the world is coming off of crude oil or fossil fuel dependence, and fast forward us 20 years from now, and the usage of crude oil is going to be lowered. That doesn't mean crude goes to zero, because it all is an output game when you talk about oil producers. But if you have Norway, OPEC, Canada, US, we're just producing less oil across the board. But this is one of Norway's biggest revenue sources. I've got to think that the crown, or the krona, excuse me, gets smashed in the next 20 years. So maybe this is not a a level that won't be seen again, but more of a level that we will surpass. And I'm going to extrapolate like literally 20 years out, for our,
they'll
for our
rename it
kids.
the lira.
I mean, seriously, you start looking at things like this and you go, well, shoot, why can't the Norwegian krona get smashed continuously for the next 15, 20 years as Norway figures out how to export flowers versus crude oil? I don't know. I'm just talking out my butt right now. But what do you have to say about that, Stelios? Because I know you focus a lot on Norway.
About your butt, you mean?
About my butt, yes. About my butt.
Norway has burned me the last couple of times I tried it, so I'm going to leave it alone for now. But
what I'm saying, does that make sense?
Yeah. I don't know, man. Seriously, I have very difficult time understanding this market at the moment. So I'm just gonna leave it at that.
Hallelujah. Me too. Go ahead. Please, Ryan, let's hear it.
One of the rare times when I don't have something to say. Yeah, sorry.
Caught that. I'll say if we're still around in 20 years' time to talk about it, something's gone wrong.
Yeah. Hey, technology today. I'm telling you, Dale's living to 100. K-Man's gonna live to like 120. Ryan, you're gonna live, well, you drink too much beer, you're gonna live till 80. I'm just
kidding. 8 o'clock.
Just kidding. There's no modern medicine is gonna be able to help you and your beer drinking.
I'm glad to science.
It's good for him, I think. Health, it's good for his health.
Is it?
Puts hairs on your chest, apparently.
Malt and barley and all that stuff's good.
Yeah, no, I'm joking about that, but no, our kids and grandkids, boy, they're going to end up living a long time. Anyway, hey, it's been a really, for me, it's been a nice recovery week. I want to tell the viewers here, I had a really rough go the last few weeks trading. Sometimes when you trade, you're on, sometimes you trade, you're off. And like the chat room, and we had this big conversation last week. And I actually had to take a couple of days off. I took Friday off, took down my positions, basically to strip them all down to basically nothing. And needed a few days to reset. This week has been really good for my mental trading capacity, because it was drained. And we go through
Good
periods
news.
What's that?
Good news.
Well, yeah, we go through periods, drawdown periods, and these are the things that we as traders go through. And if you think that you're immune to it, you're not. I mean, and whenever you think you're hot shit, that's when the market's going to stick it to you. And I just came off a great first half of the year. My first half of the year was spectacular. Those of you in the ForexAnalytix community probably know that. And then I had a period of several weeks of a drawdown. Most of it was trying to fade the yen, on this explosive move higher. But I've put my trading cap back on and, gotten back to it. But I just want you all to know that it is part of trading. It's part of, going through it. I mean, I traded for a fund for almost 5 years. And I've watched the best of the best go through drawdowns. And I've watched the best of the best, smartest guys that I know in the market still to this day go through drawdowns. And so it is part of it. And if you think, like I said, if you're a trader and you're relatively new and it's happening to you, just realize it happens to all of us. I'm going on my 26th year of trading, and I had a tough go at it. But look, you sit down, you buckle up, you put your chin down, put your chin up, excuse me, and you buckle down and pull down your trade size and chip back you're not going to make it all back at once, but you chip back and you chip back. It's mostly chipping back your confidence. And once you build that confidence back up, you'll be right back on top of it again. So I just want to make sure that everybody knows that that's something that I went through over the last couple of weeks. And it was tough. K-Man, Ryan, Stelios, you guys heard me in the chat rooms, going off on it. And, do you guys right?
remember Refco?
Yeah.
Yes.
Of course.
Absolutely.
I used to trade with them. Yeah.
Okay. Well, Dittmer was the CEO, and his locals on the floor, he would let them trade into deficit. And he said it's how his traders performed when they were in the red that he could tell whether or not they were going to be good traders.
Wait, that is such a great story. And let me can I add to that really quick? I'm going to tell you what happened when I went to trade for this firm. So this is a 100% true story. I was like, I cleared out most of my positions, but a short gold position. And I was going to go work for the sister company, and I went to go meet with the CEO. Some of you know already who I'm talking about because you've heard the story. Maybe a couple of you heard the story before. I was literally down like $100 grand going into this meeting, and he knew I was short gold, and it was up in my face. It was like when gold was flipping around, 30 or 40 bucks a day. And I had, wide stops in my position. And for what I was trading, it wasn't that much money, but I was down like about $100 grand. And, he interviewed me, and he's like, okay, we'll get back to you in a week, and, we'll seal everything up, and you sign the paperwork and all this other stuff. Anyway, over the next week, I ended up recovering. I made back that $100 grand. I think I made like another $150,000 on top of that, trading gold. And he called, we talked, and I'm like, yeah, I was kind of sweating. He's like, I don't care if you lose money. It's how you recover. That's all that I really care about. I watch you, come out of your, negative position and swing it into a positive position. And that's all I care about, is the recovery, is the fact that you can recover. So you're on. So that is what happened. And so it does happen, K-Man, Ryan,
Gratefully, it's not
Stelios, you probably have heard similar stories, right?
Yeah.
No one hears stories like mine.
I have to say, when I first started trading for a bank, in this is 2002. The guy who basically mentored me, very, very experienced guy, really good track record. First year I was there, I think the Bank of England hiked unexpectedly or something like that, and he found himself down something like 15 million pounds, and that's 1.5. So that was a big chunk, and I was like, sitting next to him. I think I was 3 weeks into my internship at the time, and so I was very new to this. And I looked at him, and he wasn't even, sweating at all. He was just sitting there very calm. Yeah. And I'm like, I want to go vomit. I know,
I'm going to go puke on myself.
and he managed to bring the year back to positive, not big positive, but back to positive on the year. And before that, he had something like 10 really good years. So it really didn't matter to his boss or to anybody because they knew who he was and what he could do. But I still remember his calmness and how his boss came on that day next to him saying, what's the damage this? Okay, what do you think about doing? He says, well, I think my strategy is going to be this, X, Y, Z. And he goes, okay, carry on. And that was it. And then it took him obviously months to bring it all back, but he did. And so exactly what you say, how you respond to pressure and to being down is everything.
Yeah, because most people go fetal.
Yeah,
they do.
That's why I call traders warriors.
They go into the fetal position and start sucking their thumb, and that happens. Ryan, what have you? How's your experience?
Have you been sucking your thumb?
Have you been sucking your thumb?
Yeah, I mean, a couple of things. I said on the flow show this morning, I've had a frustrating couple of weeks on the trading front. You know me, I look at all the fundamentals, I look at the events, how to play this bank, that bank. And I've been pretty much right in what's going to happen. I just haven't the trades haven't matched up with the event. So it's been
You just
frustrating.
didn't execute well on your ideas.
Yeah,
right?
or haven't hit the right levels to get in a trade, and then it's gone, away without me, and you get those frustrations. But the same thing with things like when you have bad days and stuff. You happen to me on the floor. Sometimes I'd walk in the pit 7 o'clock in the morning. My first 3 or 4 trades would be absolute stinkers, and you've been there an hour and you're down a couple of grand or something. And in those days for me, a couple of grand was a lot. And you'd spend all day clawing it back, and it would, and the bell would go at 4 o'clock, close the markets, and you'd look at yourself and think, well, I've got myself back to near enough flat. It's just cost me commission today, but it felt really good. So you felt a sense of fulfillment that you worked your bollocks off to get back to just zero, and that was as good as a win, because if you could have traded that way the first time, you'd have been out the pit within 2 hours with profits in your pocket. So some of the most fulfilling days was when you made a rick, lost money, and spent the rest of the day just clawing it back, and you got back to zero, and you thought, wow, I've had a great day. And that's the way you got to think of it. The idea of trading is not to make money, it's not to lose money. You do that, the rest take care of itself.
Right. That's so true. Hey, by the way, Michael just said, I hope this episode goes to Spotify. I want to save this one. It will definitely be on YouTube. We're putting Dale's awesome and unmatched interviews on Spotify for all the different guests that we bring in. We're not putting typically not the first half of the show. We're not putting on Spotify. And the reason why is because we're talking charts most of the time, Mike. So, we're talking charts, and we don't want people to be, I think Steve made a great point when we talked about doing this. Steve's like, well, people are going to be listening to Spotify, and they're going to go, oh, he's talking about the Aussie dollar like a week ago. And like, I can't see the charts. I have no idea what he's talking about next, you know what I mean? But you will find this episode on YouTube. So make sure you go back and save it there. And you can save those on in your YouTube account. By the way, equities are coming under pressure because they heard Dale coming in.
They're back under they're back under the throwover.
Yeah, and by the way, yields are breaking down now, guys, and the dollar yen has taken notice of it. In case you are not taking notice of it, 2 years on the trend line, 5-year is breaking is on the trend line. 10-year is breaking down, and the dollar yen has taken note. Remember, the Nikkei has broken down as well. And look at yen is nearing. This is just over the last hour since we've been talking.
That's 30 pips or 40 pips since we came on the air.
Yeah, so it's about 50 pips since early. Yeah,
you had plenty of time to short it.
And if you're a ForexAnalytix subscriber, I just put out this pattern in play at the 161% extension, or just about, well, it says an hour ago. So just as we came on air. So just heads up, it's a big level around these parts. Hey, I know we've gone on way too long, and for a Friday, I just want to say thank you all for your support. And make sure you guys are following us on Spotify to listen to Dale's interviews. We're putting up the macro interviews on there. So this way, while you're at the gym or you're working out, or, like Mike, you want to save some of these interviews that Dale does, because Dale, I don't think anybody beats Dale as far as the interviewing goes. He's like a sponge of information. I mean, Dale, I don't know how you remember all this, like your conversations you have with these people, like from 6 months ago. You're like, last time we talked, the S&P was here. And I'm like, huh.
Blake, I walk into a room. I can remember that, but then sometimes I'll walk into a room and I'll go, what did I come in here for?
Yeah, or you're like my wife.
Really, Ryan, that doesn't happen to you yet, does it?
She has her car keys.
I don't know why for breakfast.
She's like, where's the car keys?
Yeah.
Anyway, it looks like we dropped off Stelios. We lost him. We lost K-Man. And before we lose anybody else here, I just want to say thank you all for being with us. And guess what? For those of you that are in the know, I am traveling next week. So get ready for the S&P to drop probably 10% while I'm out of town, because that's what happens when I leave. So
you have a phone, you could do it. And Blake, I hope you have a successful and fun trip.
Thank you.
with your
My son
son.
is competing in national championship for football. That would be soccer in the United States, and he plays at a pretty high levels. And he's 16, so there's going to be a lot of college recruiters watching his goalkeeping skills this next week. So I'll be
It's part
out.
of your retirement plan.
That is, if he could play for the Premier League, even be a bench player like Mike Turner from the U.S. How much does that guy make in Arsenal, Ryan? Do you think?
I don't know. I don't talk about the rubbish teams.
I know, but he's got that dude's probably makes like, I don't know,
$1 million.
No, way more than that.
Not necessarily, Blake.
Well, I don't
not
care.
necessarily, but definitely not below $1 million, right?
You think, Steve? How about this? You think he makes more than my salaries?
No.
All right. Anyway,
right,
team,
guys.
great job.
Thank
again
you.
this week.
Great week.
Really. I'm nice comeback, and you're going on a trip, Blake, and Ryan, K-Man, Stell, Steve. I've said it for years, best team on the net. So
thank you,
every
Dale.
time,
And you're the best in what you do in the net.
Yeah, and so people come in here, and like today's a perfect example. Could have pulled the trigger on my ideas. They're not always right, but just that trade pays for a year. Or maybe how about an assessment? So you have more than your $5,000 to trade. So whatever you're dreaming, if you have a chance to execute on it, do it. Time. You never know. Now is the time. It's all we have. And guys, have a great weekend. And
same to you, Dale.
We'll carry on without Blake, and we'll lay it all out on the court again next week. So everyone have a great weekend. Enjoy, recharge, and don't just count your pips, count your blessings. We'll see